What's something today that nobody is listening to?
Well, basically the same thing, because the same problems that I correctly observed in the years leading up to the '08 financial crisis, they're here today. It's the same problems created by the same source, only the scale is larger. The coming collapse, financial crisis, is much greater than what we went through in '08, '09. But the same people who couldn't see it coming back then are oblivious to it now. And they're going to have the same reaction, just like in 2008. People were saying, oh, well, nobody could have seen this coming. This just totally came out of left field. Black swan, 100-year flood, right? Don't blame anybody for not knowing that this crazy thing was going to happen. Of course, ignoring all the people, myself included, who did see it coming because it was predictable. It was not a black swan. It was a garden variety swan, if you understand, what to look for. And so we have another gigantic white swan that they can't see. That's looming. That's much bigger because it's not just going to be a garden variety financial crisis like we had in '08. It's going to be a sovereign debt crisis. And it's not just subprime mortgage borrowers that can't pay back what they borrowed. It's the U.S. government that can't pay what it borrowed. It's going to be a currency crisis because when the U.S. government can't pay, the Fed prints. And that is going to turn the inflation problem into a potentially hyperinflation problem, but certainly a much bigger inflation problem than the large inflation problem we have right now. Inflation is the number one economic problem in the country, and it's going to get a lot worse as this crisis unfolds. Well, the government has totally screwed up the housing market. Prices for homes have been, artificially high for decades because of government subsidies. The government guarantees mortgages, and because of that, mortgages get made on much looser terms and get extended to far less creditworthy borrowers than would be the case in a free market. And in a free market, down payments might be 20%. But with the government, people could buy with nothing down or 3% or very low down payments. And in the free market, banks would be a lot more concerned about the ability to pay. But once the government guarantees the mortgage, no one cares if the homeowner can pay, because if he doesn't pay, the government will. So this has caused a lot of excess credit to be pushed into single-family housing, condos. People have bought homes that otherwise might have rented. And so more owner-occupied housing has been built than might otherwise have been built. We might have had more multifamily, more apartments, but the government, through subsidies, kind of pushed everybody into home ownership and pushed up the price of homes to the point that people were really stretching to borrow a lot of money to buy homes that they really couldn't afford. And so the market has been screwed up for a long time. But what really happened during COVID to screw it up to an even greater degree was that by slashing interest rates to zero and keeping them there, mortgage rates went down into the twos. Mm-hmm. And lots of people refinanced and now have these rates, super low rates, that will never really exist again, locked up. People have maybe 28 years left, 25 years left on these mortgages, fixed rate mortgages. And they're never leaving these homes because that means giving up that mortgage, which is probably their greatest asset, but also the bank's greatest liability. One of the reasons that the banking sector is in worse shape now than it was in '07, '08 is because back then they lost money on defaulting mortgages. So the mortgages that didn't default, they were fine. Mm-hmm. It was only when the borrowers defaulted where it was a problem. And that was a big problem for a lot of banks. But today, it's not about default. It's about every single mortgage that the bank owns, because it's losing money on even the good mortgages because they're underwater. They have a mortgage that pays them 3 or 4%, but the Fed funds rate is over 5%.
So my understanding with some of those loans, banks flip them. So if they issued a loan at 3%, they're only holding on to it for a few months. And some banks hold on to them.
Somebody owns that mortgage. Correct. And is underwater and is taking a loss. But banks still own a lot of mortgage debt, a lot of mortgage-backed securities, a lot of treasury debt. All of that is underwater. I mean, these banks are all insolvent, including the too big to fail banks. But the government lets them pretend they're not by not having to mark to market these massive losses, because they hide under the assumption that they're going to hold these investments to maturity, these mortgages and these bonds. But they may not have that luxury. If their customers need their money for whatever reason, they're not going to have it because they've lost it in the bond market. But the other part of your question, so you have all of these homeowners now that have locked in these low mortgages. They're not moving. That means those houses are really off the market. And if you want to buy a house now, there's not a lot of inventory, and there's not a lot of new construction because it costs a lot to build, with rising material costs, rising labor costs. And so people are stuck. Home prices are not falling, which they normally would with a big rise in interest rates. Like we've seen, mortgage rates have gone from 3% to 8%. You would expect a big drop in home prices, but that hasn't happened because the homes are just not for sale.
So who should buy a home today?
Well, I mean, it depends on your circumstances and where the home is located. But for a lot of people, and this has been the case for a long time, renting is a better option. Now, another thing that the government has done, too, to push people into home ownership, which has helped screw up the market, is the tax consequences. The government gives you a tax write-off. If you buy a home, you can deduct your mortgage interest, but you can't deduct your rent if you rent a home. I mean, sometimes there's a renter's credit. Some local governments give that, but there's much bigger government subsidies for buying a home rather than renting. And so that's caused people who might otherwise have been better off renting to buy instead, because they're taking into account the tax benefits. But in the real economy, they should be renting. But in the economy created by government, they end up buying. But that distorts the market, and it leads to a less optimal decision because it's all based on taxation. A lot of people don't itemize their deductions now. They take a standard deduction. And so it doesn't matter that the mortgage interest is tax deductible. They don't get the deduction. Depending on, again, your circumstances, a lot of people are better off renting. A lot of people who own homes, the only reason they're better off staying where they are is because their mortgage rate is so low. Their mortgage rate may be so low that if they sold their home and rented, their rent would be higher than what their current mortgage is. Now, they are stuck with maintenance, insurance, taxes. All these costs are going up. So it's not like the cost of home ownership isn't rising with inflation. It is, making it even harder for people to buy a home today, because not only do you have to pay these inflated prices and then borrow at 7-8%, but you have to pay insurance costs that have basically doubled over the last few years. You have to pay much higher maintenance costs. You have to pay higher local property taxes. I mean, everything related to buying a home is a lot more expensive. But of course, if you don't buy a home, if you rent, rents have gone way up, and there's no end in sight. They're going to keep on rising. Why would you take any money that you have and pay off a sub 3% mortgage? Plus, you get the tax write-off potentially for that mortgage. So the real effective cost is probably below 2. Why would you do that when, you could take that exact same money, put it in the bank, get 5%, and then use that to pay your mortgage and have money left over? Or you could do something more productive than a 5% investment. You could buy, dividend-paying stocks. Let's say the ones that we, manage in our portfolios. A lot of dividend-paying stocks are paying 7, 8, 9, 10%. Plus, the stocks could appreciate over time. They probably will. So, instead of taking that money and paying off your mortgage, buy other assets. Worst case scenario, you could always rent out the house, because you could probably charge in rent more than you're paying in mortgage. And so let your tenant pay your mortgage for you and keep the difference. Now, of course, you do have to pay property taxes, maintenance, insurance, but you can build all that into the rent. Generally, when you're young and have, no real roots anywhere, you don't know where you may end up settling down, if you may settle down, who you're going to marry, how many kids you're going to have, if you're going to have kids. Those are a lot of things that are important when it comes to, planting roots and buying a home. But one of the benefits of being young and being single is you can kind of play it by ear. You can go wherever the wind blows you. And why do you want to be tied down to a home? Sure, you can sell your home at a gain right now, but the market could change. Somebody could buy a house today and it's down. And it could take you months, maybe years to sell a house unless you're really willing to move the price down. Whereas if you're young, if you're single and you're renting, you can get out of a lease very easily. You get a job offer in another city. You meet a girl in another city, another country, and you can go, right? So it's like renting has a lot of perks when, you're single. And then you don't need a lot of space. You don't have the wife and kids, maybe you have a pet. Yeah. So you can rent out your room and then you could leave and go where you want and just keep it as that's a little bit different when you're talking about it as a
investment vehicle,
cash flowing investment. And people have done that, sometimes college kids, their parents, well, let's buy a place and you can get some roommates and we'll make a little bit of money.
But there are a lot of people that were pressed into home ownership by overzealous realtors who make a big commission. And then the idea that, oh yeah, I'm going to get rich owning home. Realtors kind of perverted the American dream into home ownership. Like that's the American dream, buy a home and get rich, as if the home makes you rich.